99% of the people out there, 99% of the retail noobs are not looking at the data in front of their face, and they're missing it. They're looking at Bitcoin dominance, they're looking at this, they're looking at that, they're looking at MRV score, pi cycle. There's data that's staring at them in front of their face, and they're just going to miss it. Number one is liquidity cycles, which we don't have yet. And I'm not going to get into that in this particular show, but liquidity cycles, rates are coming down. So let's look at rates first. Let's dive in. Rates are going to, this is great for us. Fed funds rate futures, 87%. Basically, we are guaranteed a rate cut in the December 17th meeting in 2-3 weeks from now. What does that mean? It means 25 basis points off the short-term rate. Secondly, in 3 days, the Fed is ending quantitative tightening. I want to make a point here to say that quantitative tightening coming to an end does not equal quantitative easing. Somebody said to me in Twitter today, they said, well, in COVID, there was a huge liquidity event. I said, COVID increased the money supply by 25%. The entire money supply. Yeah, you're going to get shit flying. That's not going to happen, barring a black swan. That's not going to happen. You shouldn't expect that to happen again. So quantitative easing to me, QE infinity is off the table. Quantitative tightening is coming to an end. That just means a neutral Fed. And a Fed that does not like Donald Trump. We're going to get a new Fed in there. When are we going to get it? July, June. And then they're going to start nuking rates, which is great for altcoins. But when is that going to come? That's going to come June, July, and then with a lag, probably September, October, November, December. That's the start of your new bull market, guys. I mean, to me, it's clear as day, and people are missing it. Another thing people are missing is this. Look at these arrows right here. I mean, clear as day. Look at this. Technical analysis does not predict the future, but it does a pretty damn good job on the high time frame of saying, watch out. 2021, November, watch out. December, January, watch out. Big red candles. Head and shoulders, watch out. 2025, end of the year, by the way, the same end of year 2021, end of the year 2017, end of the year 2025. You know, it's just math. We're getting this a head and shoulders again on the RSI, and we're getting a break of that. We're getting a break of the MACD. And look at this. One of my favorite indicators, the parabolic stop and reverse, also flipped bearish on the monthly. Now, it can do that, but this is earlier in the cycle. So it can head fake. This is later in the cycle, guys. Look at it did it again here. 1, 2, 3, 4. Flipped bullish again. And then it spent 518 days on the bear side of price action. That's like a long time. That's like 18 months. Are we going to do that again? I don't think so. But we are at the first one. We are at the first one over here. We are at the first one over here in 2018. What does that tell you? It tells you watch out, right? Watch out. And this is what I wanted to also get to is this doesn't have the Gaussian, this does. We are inside the Gaussian here. We played a nice support bounce here. But what I'm expecting is, and this is going to come true. I mean, this is fucking financial advice. I'm a CFA charter holder, by the way. So what I'm expecting, joke, what I'm expecting is a play off the midline or the top line. The midline's at 93, the top line's at 105. I'm also going to say that the RSI is going to bounce to the midline here at 50. So expect those bounces. They're going to come for Bitcoin. For alts, I don't know, head and shoulders here, and then kind of a break of the neckline right there. It doesn't look good. Things don't look good. So I've shifted my portfolio recently to out of 90% of my Bitcoin, out of 100% of my alts, and into metals and mining. And I had a discussion with somebody in my comment section that said, you know, what do you prefer, the metals themselves or the miners? Well, I'm going to talk a little bit about that today. The miners have revenue and have expense. They can trade at a higher PE ratio than the revenue, like a price to sales of 2 or 3, price to earnings of 10 to 12. But they have expenses as well. The metals themselves are the rocks. Gold, silver, they just go up. They just float up. So yeah, a gold or silver miner can trade at 10x the spot price of gold. but I'd rather hold the physical asset. That's just me personally. And what we're seeing here is a high correlation trade. So I'm going to talk about this next. This is my second topic of the day. The Fed quietly injected 125 billion with a B, that's 12.5% of $1 trillion into the banking system at the end of October. Bitcoin hasn't responded to that. But what has responded is silver, a precious metal. Gold has had its run and will still consolidate and probably move up. But you're also now seeing silver front run the Fed. Very interesting shit. Okay, so while I'm on the topic of commodities and my page not loading, I'm just going to skip to what I just read today is that AI data centers' massive demand for aluminum, good, is crushing the aluminum industry. I thought that was kind of a bearish title, but it shouldn't be. The U.S. aluminum sector, which is nearly dormant after years of shuttering smelters, is now attempting to build out more capacity. To me, this is bullish. In a world which are more energy intensive, it's going to be built with aluminum, bullish. And the aluminum index can be captured here. This is a basic materials ETF. So this is like the aluminum miners. So you're going to get those, you're not going to get the raw aluminum, you're going to get the miners in here. So that's what I wanted to clarify earlier in the show, that the metals themselves are not the miners. But you can get a 10x on the PE of the miners. And it's in a nice ascending triangle. And if you go back even further, I mean, it's just up. You do see these nukes. And when black swans happen, 2008, 2019, 2020, commodities and stocks and bonds, they all fall together. But my bet is that the commodities over the long term, 3, 5, 10 years, are going to start outperforming the stocks because we're going to move into a more inflationary world. And that inflation, the metals can pass through that inflation, but the miners cannot. Okay? So AI data centers, aluminum. So I'm now bullish on gold, silver, rare earth, aluminum, nickel, uranium, energy. And I'm going to do a whole nother podcast, a whole nother show on metals. And I'm going to come back to that because people like that shit, and I like it. And the last thing I wanted to cover in under 10 minutes, I hope I'm not boring you guys. It's really interesting shit to me. And I got this new microphone, and I fucking love it. And so the Wall Street 2026 forecasts are rolling in, and they're more bullish than ever. Here's a great indicator for you guys. Whatever Mike Wilson at Morgan Stanley says, prepare to do the opposite. The guy's always wrong. He gets paid millions of dollars to be wrong. I hope you're listening, Mike Wilson, because I'd like to have your job. I'd be much better at it than you. Wall Street's forecast, and we can go through Goldman Sachs, Morgan Stanley, Deutsche Bank, JP Morgan. They're all saying 7,500 to 8,000. Oh, there he is, Mr. Mike Wilson. There you are, strategist Mike Wilson, who was bearish in 2023, who was saying recession in 2023. Oh, he doesn't get penalized for being wrong, you know. The guy, I don't know. He's got to deal with the devil. Mike Wilson, worst analyst on the street. He's like a CEO of Morgan Stanley's investment bank or whatever, research. Anyway, when Mike Wilson starts getting bullish, get defensive. Doom loop. That's what I wanted to say. That's the show for today. I hope you got value from it. Leave if you made it through if you made it this far, thank you. Leave a like, leave a comment, turn all notifications on to all, because that'll notify you when I have a new release. And I'm going to be doing more shorts and, you know, teasing the shorts off of this long form show, and just trying to help people, just trying to educate people. This is my career, and I've always wanted to be a broadcaster, to be able to help people. And so welcome on the journey of the macro ghost. I do have my chartered financial analyst, all 3 levels. So I don't have to say not financial advice. I'm not a financial advisor. Fuck all that shit. I can give financial advice. I can model portfolios for you based on your duration, your return requirement, your risk tolerance, et cetera, et cetera. So thank you if you stayed. And if you didn't stay, you missed a lot. What can I say?